Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting here from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance from which this move to the downside was created, which is now turned support here. Now, as the market is testing this previous resistance turned support, we could expect bullish development away from this zone. Specifically, what we could expect is the potential completion of this monthly impulse correction and impulse pattern to the upside. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And what we can see here is that the market has in fact created a correction exactly to the 50% of the Fibonacci taken on this monthly impulse, which is a quite strong level of monthly demand and support that, combined with the previous structure resistance turn support that we have previously identified, creates confluence of support at this area, inside of which we could see institutional longing, which at that point could push the price even higher, which is in fact exactly what the market has just started doing. Now, why do I say institutional longing? Well, that is something that we will be covering later on during the analysis. But here on the monthly, everything looks very bullish. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we have to definitely identify how strong this level for this market is historically. We can see how from here we had the rejection to the upside, so this level was acting as support. Then we had the break below that zone. The previous support started acting as resistance here, was respected as resistance, again here, tested and respected as resistance, again here, tested and respected. Then we had the break above that zone, and this previous resistance became support here and was respected as support here, and once again tested here as support, and the market started rejecting it to the upside. In a situation like this, we could expect more potential bullish development away from this zone, since also here on the weekly, it is quite clear how the market is currently rejecting support. We can also see that with the last candle, we had this candle here. So a candle that after rejecting weekly and monthly support created a very long wick. Usually when you have a situation like this, rejecting support with a candle of this shape, you would see the next candle filling in the wick. That is a quite common pattern. Going down on the daily time frame, what do we see? Now, from a daily perspective, first of all, I did speak about USDJPY quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. And in fact, that is exactly what the market gave us. Then from here, I made a full breakdown explaining all the reasons for which we could expect first this correction, and then from here, more bullish continuation. And again, that is exactly what the market gave us. And by the way, I will link in description these previous analysis, so you can go and check them out for more free education. Now, at the moment, what we must identify is that from a daily perspective, we currently have new structure which just got created. In fact, we can see how this level here is now previous daily resistance from which this move to the downside was created, which is turned support here. As the market is testing previous resistance turn support, we could expect bullish development away from this area. And we must also notice that, as we did on the monthly, since we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have a perfect 0.32 retracement lining up perfectly with this previous structure resistance turns support, creating a confluence of support, inside of which we could see institutional longing. And if we see institutional longing, that would further increase the probabilities of getting a rejection to the upside away from this area. Now, if we go and see what we have when it comes to the commitment of traders, so what institutions are doing in the market, so hedge funds and the biggest speculators in the market, so the big players in the market, and we check the data precisely for the JPY, we can see how in the long term, the JPY has been getting quite negative and bearish. We went from having minus 20K net positions at the top, all the way down to minus 79K net positions, currently also getting decreased once again from the last report. Now, this shows that overall institutions are moving their positioning to the bearish side of the JPY. And keep in mind that all currencies on the spot are traded against the USD. So this is actually JPY USD, meaning that institutions are currently in the process of longing USDJPY, meaning that here from the COT data, they're in the process of shorting the JPY USD, as we can see here by the net positions getting decreased. An easier way to look at it is simply that if you look at the JPY, if the JPY gets weak, which is what we can see, because institutions went from minus 20 to minus 80K net positions, so clearly they're moving to the bearish side of the JPY, so shorting the JPY, a weak JPY makes any other currency traded against it stronger. So since here we have USDJPY, if institutions are adding shorts on the JPY, which is what they're doing, at that point that would further increase the probabilities that USDJPY would get stronger against the JPY. So the USD would get stronger against the JPY, further increasing the probabilities of a move to the upside. So since here it seems like institutions are adding more longs and clearly we have confluence of support, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97, one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower here, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.